Hi there. There's a new IPO, the Mindspace REIT. What is an REIT? An REIT is a real estate investment trust. It works like a mutual fund, except instead of holding stocks, it is basically holding large buildings from which it is getting rentals. The Mindspace REIT is from the K. Raheja and Blackstone Group. Blackstone is a global private equity fund, and essentially they're raising 1800 crores and odd to basically repay their debt that they have taken from other investors. Now, the way the REIT works is that the minimum that you have to invest is 200 units. And so the minimum, I think, works out to around 55,000 rupees. The price band for the REIT has been fixed between 274 and 275 rupees. So essentially, the outstanding debt of Mindspace REIT is around 7,000 crores, and they're trying to bring it down by launching this REIT. Essentially, this REIT holds properties in five big cities like Bombay, Bangalore, Pune, Hyderabad, and Chennai. And they essentially have a lot of IT services companies who take floors and who take buildings from them. Their occupancy is around 92% with about 170 clients, and most of them being really multinational clients from technology, financial services, media, healthcare, manufacturing, and telecommunications. All right, so let's understand how does it work. Well, there are two parts to how you make returns here. One is the dividend income, which is from the rentals that are coming, and the other is capital appreciation. Now, as far as dividend income is concerned, it is going to be completely tax free in the hands of the investor. The REIT is going to be listed on the exchange, and hence it is subject to securities transaction tax when you basically sell it. When you sell it, then essentially short term capital gains are taxed at 15% and plus surcharge plus cess, and long term capital gains are taxed at 10% over gain of rupees 1 lakh. So, should you invest in the Mindspace REIT? Well, this REIT has been sold saying that it's going to actually give returns better than fixed deposits, an expected return or expected regular income of 7%, which is going to be tax free, and also capital appreciation on this particular product. A couple of things that work in favor of this REIT. Well, first and foremost, most of the buildings are let out for office spaces and not, for let's say a hotel or a warehouse, which, can be impacted really badly with any sort of economic downturn. 92% of the buildings are occupied, so that's a good sign. But I think there are some things that don't work for the product. First and foremost, if one were to look at the previous REIT that came from Embassy, currently, as per Money Life magazine, the net dividend yield is about 6.65%. Secondly, REITs are not guaranteed products. Thirdly, a lot of capital appreciation depends on when you're entering. I think the way we are seeing real estate right now, the prices have not really fallen to that extent, and I think the prices are quite high. So, in terms of valuations, I think the valuations are quite high, and from here on, having capital appreciation is a little doubtful in the near term, especially given the whole COVID situation. And we've heard of large clients basically giving up floors and giving up even buildings altogether because of the pandemic at this point in time. So, from a capital appreciation point of view, I don't find it to be that great. Remember that real estate is under the jurisdiction of the state government. So each government has a different set of rules and regulations. So should you invest? You can invest, but very clearly, this has to be from surplus monies. It cannot be from monies which are kept aside for financial goals. As of now, in India, we have only one REIT to go by, and that's not too much of data to really go by. So if you are investing in this product, remember it's for the rental yields. I don't expect capital appreciation to happen to that extent. And even the capital yields, while they are tax free, they are not guaranteed. So it's just something that you're trying out at this point in time because you want to take further exposure to real estate, or maybe you're looking at an instrument that's going to give you a regular tax free income. But remember, the returns are not guaranteed. And again, I'd like to reiterate, please invest in this product only from surplus monies. Do not use this sort of a product for any of your financial goals. Make sure you click on the bell icon to subscribe. Do check out our other videos on our YouTube channel and write into us as to what other videos you would like to hear about. Cheers.